Hi, this is Jeffrey Kerr at Kerr Financial Group. Today is January 24, 2024, Wednesday, hump day. Two things to cover. We'll revisit update the scorecard on earnings, and then look at Fed policy expectations for interest rate cuts. So 72 companies of the S&P 500 have reported earnings so far, and the numbers are great. Year over year for the fourth quarter of 2023 versus fourth quarter of 2022, there's been a 2.4% decline in earnings for the companies that have reported so far for the S&P 500. It's even worse for the Russell 2000 companies, which we're in the beginnings of maybe approaching midpoint of earnings season. There's a lot more to go, so we'll keep you posted on that. Second issue, Fed interest rate cuts. Beginning of the month, beginning of the year, 91% expectations for a cut by the Fed of the short-term rate in March. That 91% now is down to 47% earlier this week. So it looks like the Fed's not going to be cutting rates. Fed does meet next week. No expectations for any movement next week, but it'll be interesting and important to see what the statement says, as well as Jerome Powell's press conference. The importance to just try to tie this together, lower interest rates could bring, the risk of it is they could bring back and reignite inflation, and that's a bad thing. If they can do lower interest rates without the inflation, it's good for the stock markets, financial markets, because it brings more money into the system, which will propel higher stock prices, lower yields, and higher bond prices. It remains to be seen. We'll keep watching this thing. So please, thank you for listening. Please subscribe and like the videos and the platforms you're seeing, and we're trying to email them out continually too. Thank you. Goodbye.